Yeah. Hi guys, how are you?
Good, and you?
Todo bien. Guys, thank you so much for having me. I'm a mortgage broker here in South Florida. I've been doing this since 2019. I've seen it all, or mostly all. So I'm here to share some tips and tricks to win the trade. Help you guys win, get more clients, and dominate this market. So let's get started. So the training today is called Mortgage Lending 101. Um, can you guys see my screen? Okay. All right. Mortgage Lending 101. We're going to go over mortgage programs. We're going to go over um, what factors affects the interest rates. What's the difference between a pre-approval and a pre-qualifications? Stuff for you guys to know. So when you guys are talking to a client, you guys know what's going on and how to navigate those different kind of scenarios. So first, guys, we have solutions for everyone. We have the conventional FHA, USDA. We have the traditional loans that every bank has. We also have jumbo, 5-day HELOCs. We have other programs that are non-traditional for your self-employed clients. We have the bank statement, DSCR for national. We have programs that for those that not necessarily have the funds to purchase a property right away. We have down payment assistance, and we have for those that, hey, perhaps those programs aren't the best solution for the client. We also have private lending. Um, let's go to the next one. Guys, for the pre-approval, what do we need? We're going to need your government issued ID. We're going to need two most recent bank statements. We're going to need your two most recent pay stubs, your two most recent your W-2s or your 2023 and 2024 full tax returns. That's if you're self-employed. Other programs, they do have other documents that are required. Um, just use this. You guys could take a screenshot. You could um, download this. I can send you guys this afterwards so you guys have it available. Just because you guys see this doesn't mean this is all we need from your client. There may be some other stuff depending on your client's scenario or the loan program, but this is pretty much the basis of what they need in order to get pre-approved. So just keep this in mind. Maybe other program, maybe other documents, but this is just the template for them to just to get started. What impacts interest rates? Guys, a lot of people think, oh, it's the Federal Reserve, and not really. The Federal Reserve is going to control the mortgage interest rates. Interest rates are controlled pretty much by inflation and the bond market. But what impacts the interest rates for the consumer? We're looking at this credit score. We're looking at occupancy type. Is it a primary residence, a second home? Is it an investment property? What program are they applying for? If it's going to be a conventional or an FHA or a non-QM product. Non-QM means a non-conforming loan. What's the down payment amount? Is it going to be the minimum? Is it going to be the 20%, 30%, however much it is? What kind of property is it? Is it a single family home, a townhouse? Is it a condo? Guys, when it comes to condos, I want you guys to realize that there is a price adjustment to the interest rates. Why is that? Because condos are higher risk for banks. So keep that in mind. If let's say just an example, if the mortgage rate today is 7%, most likely the consumer is going to be charged maybe a 7.2, 7.3 on top of that because the condo is higher risk to a bank. And of course, there's the market. The market changes every single day, multiple times a day. It goes up, it goes down. It's a big yo-yo. I wish I could quote you today one interest rate and then have it there for the rest of the day. No, guys, most likely it's probably going to change until it is locked. We can lock you in as little as 10 days all the way to 90 days. So you guys have that option, but we won't lock your interest rate until there is a contract in the system. It makes no sense to lock you in just in a pre-approval because what if the market gets better? Same time, what if the market gets worse? But it doesn't make sense to lock an interest rate when there's no contract in place.
That's a good selling point, for when you're shopping around looking at homes and they're worried about interest rates. Maybe you tell them, hey, don't worry about it now until we get a contract and then we can take a look at it. Sometimes it takes a little time to find something for them, no?
Yeah, correct. So typically what I tell clients is I let them know upfront, hey guys, this is the interest rate for today. It could be lower or higher depending on the day that we lock. So they know going into this that this will change. This is subject to change. And I also let them know the same things that we're talking about right here, guys. You know, if it's the program and the down payment, property tax, all that stuff. So they're quite aware of what goes into that. It's not just, hey guys, this is the rate, and take it or leave it. No, there's other factors going on with this.
And also with the condo rates, remember that some townhouses are considered condos. So just because it looks like a townhouse, it all depends on what it's legally, the legal description. So just keep that in mind. It's not just condo buildings, it could be a condo townhouse as well. So
That's a very great point that Edwin brought up. Guys, I get this scenario a lot that they want me to run the numbers for what seems to be a townhouse. But when you guys go into the county website, look at the description. What is the legal description? Is it a townhouse or a townhome? It'll say there in the legal description if it's a
lot of block
lot, yeah, lot and block. If it's a lot and block townhouse, you guys are great, perfect. Let's keep moving the contract. But if it's what we see, it's a townhouse, but it's really registered as a legal condo, guys, there's more work to be done. We now have to look at the 2020, whatever 2025 annual budget to see what that's like. Then we have to submit a condo questionnaire. There's more room to it for us to close on this property. Not saying that it's going to be an obstacle, but there's just extra steps to this when it comes to that.
So a lot of block, you wouldn't really matter about reserve zone.
No,
If you see townhouse, a lot of block, then it shouldn't matter for the reserve.
that's correct. Guys, you guys have any questions right now? Okay, cool. I'm showing you guys this. I took this screenshot. I believe it was Wednesday. So this is what I have on a separate screen. I see this every day. I monitor the market, and I try to see if it's a good day to lock. If you guys look at the screen, there's going to be little lock marks. There's one right here. There's one over here, over here, over here, and so on. So whenever I see that the market, it's gonna dip or it's gonna get worse, I immediately lock them in because look what happens. It goes by our predictions. The market just gets worse. So I have this screen open at all times just to make sure I'm monitoring the market and know what's going on to protect the consumer. So, for example, on this day, December, I believe it was December 10th, I locked them in at a good high. And then because look exactly what happened, the market tanked. And it was like that for a few days. So, guys, this is very important tools at our disposal that I hope you guys I'm willing to share with you guys so you guys can see what I see every single day. So on this day, Wednesday, I have it right there. The stocks ended the day higher. The Dow closed at 317.20. I'm gonna say that trouble for you guys. This is what I see. This is for the consumer and to protect the consumer to make sure they have the best possible rate for their contract. The role of a lender, what do I do, guys? I want to help you close more deals. It's gonna be faster, smoother, and offer more solutions for you guys. Um, I know you guys have very different buyers. A lot of you guys probably only know about the traditional programs. Guys, there's more stuff out there. There's more solutions. There's more things you guys can know about this. And the point of all of this is to make sure you guys dominate this market with your clients and for your pockets. And that was it.
Can you go a little bit more into detail of like I think Chile was required, like, returns for the most popular ones, what you need.
So let's go back. Okay, guys. So for FHA, let's talk about because Lily brought up a point. She wants to dive a little deeper on what requirements are for FHA. Guys, every program has different guidelines and different rules. Conventional has it's a little bit more lenient when it comes to tax returns and employment history. You get away with only 1 year history with your employment history or your tax returns. For FHA, it's going to be 2 years, 2 years of tax returns, 2 years of work history. They want your two most recent bank statements. It's a little more work. Mortgage insurance is for the life of the loan unless they put 10% higher, 10% down payment or higher. And that when they put 10% down payment or higher, their PMI is only good for 11 years. Once it reaches the 11-year mark, PMI is removed from the for the borrower. For conventional guys, you could call into the bank maybe a year afterwards, depending on the market, do an appraisal and let them know that your property is ready for the PMI to be removed. They'll send that on appraisal, and if the equity is there, they'll drop the PMI.
On the different pre-approvals. Can you go over the, I guess, investment loan? I know some people think they could do the FHA investing, but just the
No.
primary.
Guys, so FHA, there is only primary residence. You cannot buy an investment property or a second home with FHA. Also, you cannot have two active FHAs at the same time unless you are a non-occupying full borrower for that program. So let's say I'm going to give you an example. If I have an FHA loan and I'm a co-borrower for Edwin or Lily to buy their property, I can only do that. I can only have two active FHAs if I'm a non-occupying co-borrower and they're my family member. Keep that in mind, guys. If they're not a family member, the down payment goes up to 25%. So if they are a family member, you guys can put as little as 3.5% down. So keep that in mind. Karen, I think you had a question.
No, it was that one, if it's not a family member, but also that person.
Sorry, now we're here.
Disculpa que no le fue escuchar.
A ver,
No, we can hear you now.
oh, okay, no, that was a question. If it's not a family member, what happened? And let me ask you, cuando lo van a calificar como co-signer, right?
Yeah.
Para esa calificación ese cosigner, ¿cómo lo califican? Tiene que tener vamos a decir, tiene que tener la entrada del total de la propiedad, como que si
No.
fuese.
La entrada va a venir del el primary borrower. So, el cosigner es solo para que la razón que estamos usando es seguro por el crédito o el ingreso, pero de verdadmente ellos no están pagando para para comprar la propiedad. Ellos solo están ahí en papel para mejorar la aplicación.
Ok, pero ese ingreso del cosigner,
Ayuda,
right,
ayuda a la
ayuda, no
calificación.
tiene que ser el total o the primary.
Put on yours. There you go.
Ok, sorry, Karen, no le puedo escuchar.
Yo tenía entendido que para poder conseguir un cosigner, ese cosigner, o sea, independientemente que no va a vivir en la propiedad, debe tener el peso grande del loan, de la calificación.
Claro, vamos a mirar también los financials de ese individual. Vamos a ver el ingreso, vamos a ver la deuda, vamos a ver todo también de ellos. Pero
Who's
lo-
holding most of the loan?
los
The
dos,
cosigner?
va a ser los dos, 50-50.
Ok.
Ya, no va a ser una persona más o una persona menos. Estamos buscando dos personas a la aplicación o tres, cuatro personas, no importa. Estamos mirando todo el mundo igual.
Well, you guys are getting the lesser credit score, ¿no?
Yes, thank you for bringing that up. So sí, sí, vamos a decir, yo tengo el crédito de 700 y el señor Edwin tiene 650, un ejemplo. Los bancos siempre van a usar el crédito que es el menor
Más bajo.
de los dos, el más bajo de los dos.
Ujú.
So
Right.
keep that in mind. So yeah, thank you for bringing that up, Karen. Appreciate that.
No, no, thank you.
I don't know if you want to tell them every 2 years they can do FHA, no? But it has to be
Oh,
private.
no. Thank you for bringing that up. Guys, so Karen, and everyone here else that's on the Zoom call, you can only have one active FHA loan at any given time. The only time that you guys can have two active FHAs is for the following. You're a non-occupying co-signer for a borrower, or you guys are moving 100 miles away from your existing FHA mortgaged home. Keep that in mind. I have this case every so often that someone has a property here in Miami. They want to purchase a property in Fort Lauderdale, just an example. It's not going to fly. The FHA mortgaged house has to be 100 miles or more away from the property. That's the distance. And you guys probably have to explain to an underwriter why you guys are making the move. That part is very simple. Hey guys, maybe your life changed, your family grew. That part's very easy to explain, but there are guidelines to this. It's going to be a hard stop if you guys try to get two FHA loans as your primary residence, unless you guys do exactly what I'm mentioning.
Okay. Also for the foreign national, not sure, maybe we can talk a little bit about how they can qualify.
Foreign nationals, guys.
Let's say they have a business, for example, not in the country.
Guys, foreign national, we don't look at any income documents when it comes to foreign national. We don't look at credit. All we make sure is that you have a valid passport. You cannot live in the United States. You could visit the United States. You could have a second home in the United States, but this cannot be a primary residence. You can only use foreign national as an investment loan. We do not look at income. We do not look at credit. None of that. The way they qualify the borrower is if they have a valid visa. I'll send you guys a list of the valid visas that are eligible to qualify. And if the proposed mortgage, the entire mortgage, principal, interest, taxes, insurance, and association, if the rent can cover all of that. So if the proposed rent can cover the entire mortgage amount, then you're good to go. Foreign national also has a down payment minimum of 30%. It can't be less than that. And they have to have 12 months of reserves in an American bank account.
So they gotta have an American bank account,
Correct.
they can't do their foreign,
No.
bank.
No.
There are their taxes, there's a work with the taxes,
We don't look at taxes. We don't look at any income documents for that.
just a bank account.
Just the bank account. You guys have the 30% down. Does the proposed rental income cover the entire mortgage payment? If it does, guys, you're good to go. These are very easy loans to do. DSCR and Foreign National, those are very easy programs to do because of the little documentations we need in order to get this to the closing table.
What's the minimum amount of months you need, like 12 months, 3 months from the bank statements? What kind of bank statements you're looking at?
So for bank statements, guys, there's 3, 6, and 12 months bank statement programs. You're obviously going to get better rates for 12 months business bank statements. When it comes to 3 months bank statements, yes, you could do it, absolutely, but the interest rates are a little higher for that just because we're using very limited documentation for your income.
No, but I was talking about the foreign nationals, so do you just need the last bank statement they have, just showing the funds for the foreign national?
No, we're going to need to see the entire 12 months. So we're going to see from January all the way to December to make sure
The foreign national.
to make sure the seasoning is there for the foreign national.
So when you say 1 year reserve, so that's 1 year of the mortgage. They
Yeah,
need to have in their bank account.
correct. So but still, a lot of people will say, "Hey, man, that can't work." But when I have this perfect scenario, I have someone from Peru. He purchased a property, twice with us. He bought a property twice with us. His name is Edmundo. Edmundo bought two properties using the Foreign National Program. He sold his property in Peru and put those funds in an American bank account. So what the lender did is, so the situation was with that's a very unique situation. He didn't know about these guidelines. So what the lender asked is, okay, cool, can we get a statement from the Peru whatever bank he was using? So they gave us a letter, and then afterwards they requested for the stuff to be translated and then to be sent over, and then they were able to get away with that. They were able to use that, but the money has to be seasoned for at least 12 months.
So basically, that money has to be in the bank account for 12 months
12 months
minimum.
minimum. They want to see the money seasoned there because a lot of people they use these type of programs for not accusing anyone, but money laundering. In real estate, that's a big thing.
Mhm.
They hide money in buying properties. Yeah.
So the 30% down, that amount has to be in your bank account for the whole year.
Yeah.
Every bank statement has to show
It
that.
has to show it has to show that you guys had that money. That money's you're not having an influx of, let's say $100,000 in one day to the next. They want to make sure, okay, cool, money has been there consistently.
Okay, you wanna talk about jumbo loan a little bit, the down payments and when it's required?
Jumbo loans, guys, a lot of banks use different guidelines with jumbo loans. The minimum is 660 per score for a jumbo loan. The minimum down payment is 10%. What is the minimum loan amount? Whatever the conforming loan limit is not. So for conventional, I believe the conventional loan limit is 802. So anything that's 803 or higher is considered a jumbo loan. We have programs all the way that offers 30 million loan amount options. I don't know if you guys have those type of clients. I wish I had them.
Those are more luxury clients, anything above 800 will be a
Well,
jumbo
we are
loan.
luxury, we'll find them.
We'll find them. We'll find them one way or another. So yeah, jump program is great. Very similar guidelines to conventional loans. They're gonna want to see your income docs, your tax returns. If that's not an option, guys, you still have the bank statement options. You can still qualify them with the other programs I just mentioned. But yeah, they want more documentation when it comes to those type of loan amounts.
So what's the starting point for jumbo loan?
You mean loan amount?
Uh-huh.
So the loan amount for conventional loans is 802. If I'm not mistaken. It's going to be anything after that. So if it's 802, then 803, that's what you're looking at.
For
Okay.
jumbo?
Yeah.
But you can still get a conventional loan, a 900K loan conventional, right?
No.
No, oh, wait,
No.
automatic.
It caps.
Yeah, correct. Because the conventional loan limits, the cap can't exceed that. If it exceeds conforming loan limits, then it's considered a jumbo loan or a non-conforming.
And these change every year, right?
Yes,
So
every single year around November. So just because something happens, just because the loan amount for FHA or conventional is, I'm giving you guys an example, is 802 for the year 2025. It's going to change. It's going to get updated in November, every November, every year. So keep that in mind. There was another thing I wanted to bring up, but it was something about,
Requirements.
no. It was, no. It's not hitting me right now, but guys, what questions do you have?
FHA, you wanna go over the multifamilies?
Multifamilies, guys, I'm doing one right now. This person is buying a triplex. He's only putting 3.5% down for a triplex down here in South Florida. It's one of the house hackings that people love to do. You could also do this with conventional, but conventional they require at least 5% on a multifamily home. You can use as your primary, and we could qualify you with proposed rental income from those other units. So This is great for someone that's trying to become an investor down the line. And it's a great way to start because you're already buying yourself a multifamily and you can continue doing so every year. With conventionals every year, FHA, if you buy it with FHA, you would have to refinance in 12 months into a convention loan to do the same hack again. You had
But you have to wait till after 20% to refinance, is there any?
No. After 6 months, you guys can refinance.
Yeah.
You can. It's allowed.
So then you can get another FHE after you.
Yes, correct. You could do that 100%.
So can you give us like a scenario? Let's say I go buy a multi-family home with the FHA. I guess I'll fix it up and then I go refinance again after 6 months.
I love that scenario. So there's also, keep this in mind, an FHA 90-day rule. So if you buy a property with it's either an FHA loan or conventional loan, if it's less than 90 days and you're buying with an FHA loan, they're gonna have to do two appraisals for that, just to make sure you guys are not just flipping properties. And you may get flagged if you do that. So
Say it again, so you gotta wait, how long, 6 months?
No, no,
So,
no.
so it's mixing the FHA
yeah,
with trying to invest.
Correct.
Flipping. So
correct.
you cannot do that.
You cannot do that. There's ways around it. And I want you guys to listen to this. There's ways around this, where it's considered legal, but you guys have to understand the guidelines. If you guys buy a property and you try to sell it within 90 days, a bank will want two appraisals just to make sure that the value is actually there. Keep that in mind.
Okay.
Okay, if you wanna go over the 90-day caps on. Remember, every year they change, so the cap right now for a duplex FHA is what? 743, no?
Okay, so yeah, I did mention this earlier in this that the loan limit changes every single year for duplexes. It's right now at 743,450 for 43
For 90 days.
for Miami-Dade. Triplexes is 898,700. And for a fourplex, it's 1,116,850. Guys, these numbers change every year. Also, it's important to look at the county that you're buying in because the FHA loan limit also changes depending on the county that you're buying in. Very important.
Yeah, so you could buy 3.5 down payment on a quadplex FHA.
If
That
it's
that helps a lot if you're gonna be,
So guys, another thing that we're talking about multifamilies, it's only 1 to 4 units. It cannot be five or more. After that, it's considered commercial. We can't it's considered a commercial loan. It's not going to be considered a residential loan. So keep that in mind.
okay, so that's conventional, FHA. You wanna touch a little bit on VA, what qualifies a VA loan, in case you get somebody from VA?
Guys, VA loans have very similar guidelines to conventional and FHA at the same time. If it's a VA client, they could put nothing down. We just have to see their eligibility. We will have to see their DD-214. We will have to see what their eligibility is in order to get them that 0% down payment. Also, it's kind of very similar to FHA, where you can have two active VA loans at the same time. We will have to see the reason why you're getting two VA loans at the same time. It's more documentation, but traditionally, it's not allowed to have two VA loans at the same time.
Are closing costs covered VA loan?
No. So the only thing that it's a great benefit is the 0% down payment on a VA loan. Closing costs, they still have to come up out of pocket for the closing costs. So that's another thing that it's a little bit miscued that people think that, oh, it's a VA loan, they don't have to bring anything out of pocket. No, yes, closing costs are going to be included.
How much will be like their closing costs? Like
Closing-
what percentage?
Closing costs are typically anywhere between 3 and 6% on average. It could go a little bit up. It all depends on the property taxes, the title company that you're using, the homeowner's insurance policy that you're choosing, the bank fees, whatever bank fees that could be involved. But typically, bank fees on a VA loan, it's very little, very minimal because it's a government loan. The rates are a little bit better, and the banks typically like to take care of the veterans.
What type of home will qualify VA? Like any type of home?
Any type of loan. So anything that's considered single family, condo, and a multifamily. Guys, condos, it's a very big thing here down in South Florida. You have to look at the budget. That's the first thing, that's the first line of defense to make sure that the condos meet guidelines. I typically request the buyer's agent to send over the year's approved budget just to make sure there is at least 10% in reserves. If it shows already that in the budget that there's not 10% reserves, it most likely will not pass underwriting. It'll be considered a non-warrantable condo, and other banks could do it for 10%, but if you're trying to buy it with conventional, it's going to be at least 25% to buy a non-warrantable condo. And another thing that we're on the topic of condos and the budget. Just because the budget says that there are 10% reserves, that's great, perfect. That's just the first line of defense. We still have to order a condo review, a full condo review if they're only trying to buy it with a minimum. A lot of things can happen there. That's nothing that the bank is in control of. That has to do with the association. What banks look at is the association's financial history. Is there an assessment? Is there anything that needs to be fixed? Are there any legal issues? How's a master policy looking like? There's different factors that could kill your deal in the condo underwriting phase.
So anything that's 10% on the budget will qualify FHA or conventional, or it has to be 25%?
So, good. That was a very great question. I was not expecting that. Let's talk about that. So, conventional, it's a lot easier to get a condo approved with a conventional loan. FHA, you're looking at more steps. There's a website that everyone can go to see if the condo meets FHA guidelines. If it's not there, it's most likely not going to get approved. Not saying that it won't, it's just most likely it will not get approved. It's different steps.
Well, if it's not there too, during the process of buying they could get it approved as well. I mean,
There's-
obviously you run the risk of not getting the loan approved, but being under contract, right, Oscar, the lender himself during that process could probably get it approved.
Those are called spot approvals. So if you guys have to run into that, if you're trying to buy a condo with an FHA loan, and we already see the budget's not there and they're not already approved, you guys could still go with the process, but now you're probably looking at a 60-day closing because HUD has to go in there and they have to make sure that the condo and the association checks off every box. Guys, I say this with care because I know we're trying to get every client into the property, but getting a condo FHA approved is like finding a needle in a haystack. You guys are gonna be driving yourself insane doing that. So I would have these educated conversations with your buyers and let them know that the challenges when it comes to trying to buy a condo with an FHA loan.
And they do conventional with like a 5%, 10% down?
Absolutely. You guys can do that. Well, you guys could buy a primary resident condo with a conventional loan with as little as 3% down.
So it takes away a lot of the hurdles if you could do conventional.
Correct. We still have to order the condo questionnaire. We still have to review the budget. But if the budget is already good enough, we send the condo questionnaire. And if that meets guidelines, guys, you keep pushing forward. But
If it's conventional.
if it's conventional. So guys, if you guys have a buyer that's looking to buy a condo, I would try to get them to be a conventional loan because you guys will drive yourself insane trying to find a condo that's FHA approved.
I think the only thing that everybody says FHA, the low down payment. Don't forget conventional as well, as little as what, 3%, 3.5?
3% is for conventional. That's the minimum down for conventional. 3.5% for FHA. If they're not, and that's only if they're a first-time home buyer. If they're not a first-time home buyer, they're looking at 5% down with conventional or FHA. Another thing about condos, I didn't want to bring up is the master policy. This happened to me very, very recently. I lost a deal because of the master policy, and it was because they didn't have enough hurricane coverage. I'm not an insurance expert at all. I don't want to pretend I am, but guys, make sure that the master policy is there, that the association has a master policy. Confirm with the association's insurance agent about the coverage that it has because it will come up in underwriting and it could potentially kill your deal if the coverage is not there.
Okay, just remember, guys. Just remember, guys, that when you guys are listing, these are all things you guys gotta talk with your seller as well. So if the condo's FHA approved, if you guys have to try to get the budget ahead of time, ask the questions about the insurance, you guys gotta ask the seller all these questions, so when you guys put it on the market, you guys are able to put the right description on it. If you don't wanna put FHA under contract, and then the condo, it doesn't get approved by the loan, and then you're back on the market, so you're just wasting more time.
Guys, I'm gonna share with you something real cool and so something that you guys could do on your own. 1 second. Second meeting's been and I'm gonna show. Can you go on your website?
The,
Yeah, I'm gonna pause it. I want to show you guys that. So can you guys still see my screen? So we're gonna go to FHA approved condos. Then you're gonna go just put this here. See this. Now go to here to FHA condos.gov. And we're gonna go here to FHA approved condos by location, name, or status. You guys are gonna be surprised of how many approved condos are in just Miami-Dade County. Miami-Dade, status, approved, search type, both. Let's see. Can you guys see that?
yeah,
Yeah. So you guys will see it's a very short page of condos that are approved. Only nine approved condos in Miami-Dade County. So this is why I emphasize that if your client is only approved for FHA and he is only able to buy, or they're only able to buy condo, guys, get ready because it's gonna be fun trying to find a condo that's FHA approved.
I wanted to say something too, so I was, Eric, can you hear me? Yeah, good, okay. So if you see the list, there's only like a hand-picked few.
Nine.
Most of these, if you look them up, the homes here start at 1 million. If you have a buy, like for example, Icon and Brickell, there's nothing there listing wise under 1 million. So it wouldn't even qualify because of the loan limit itself. Does that make sense? So even though it's FHA approved, probably because in the past, it doesn't mean your buyer, a $1 million buyer can get an FHA and Icon Brickell. It wouldn't go through.
I'm not saying that it wouldn't go through.
Well, it would go through because of the cap. So if you're sitting at 1 million.
Oh, sorry. Yeah, Lily is absolutely right. Yes, guys, there's loan limits too that please keep that in mind. And again, I sound like a broken record at this point. Guys, FHA condos are a needle in a haystack. You guys will drive yourselves insane if you guys try to find this. Karen, did you have any questions yet?
No? I'm
No?
fine.
Okay. Señorita?
You wanna go back to the slide?
Yeah, of course. Let's go.
I'm just taking another couple.
The down payment assistance or the programs. Because sometimes they have programs for the county that they provide to first-time home buyers. Do they qualify for, for the FHA programs you guys have, or you guys have your own?
Guys, so we do county down payment assistance programs. Personally, I don't like doing them, and I'll tell you guys the reason why. Because the county, there are income restrictions with the county down payment assistance programs, and you guys have to read the fine line. If you guys try to sell within the first 5 years, the property the county is entitled to keep a certain percentage of the equity earned from that sale. So let's say you guys buy a property for 200,000 and you guys want to go sell it for 300,000. The county is, I believe they're entitled for up to 50% of your profits from that. So I don't really like going with the county because of there's certain fine prints. But we do offer other programs. We have forgivable down payment assistance programs, and we have ones that are not, that they would become a second lien. Forgivable ones, they come with a higher interest rate, and they could be forgivable after 5 to 10 years. That's a great option, Edwin. I believe we did one together with a down payment assistance program. Was it Florence?
I think so, yeah.
All right, so Edwin and I had a couple of years ago, we had a client that she was tight on cash, but we were able to get her a down payment assistance program that pretty much covered all her closing costs in order to get it to the closing table. But like I mentioned, it comes with a higher interest rates. I do enjoy it. I do enjoy those type of programs because it doesn't have any income restrictions. Anyone can qualify, but of course we have to look at the the DTI, that's an income ratio, because since I keep mentioning there is a higher rate, so we have to make sure they qualify with that higher rate to get that down payment assistance programs. But they do have conventional and FHA options for that.
Okay. FHA home conditions, well, that's one thing they gotta consider, no?
FHA and
Like the condition of the home, like have any broken roof, it's gotta be up to date, no?
guys, so when it
Gotta
Yeah.
be, what type of livable are we talking about? You know, can it be like a graphic highly special, or are we talking about?
All right.
conditions that we gotta.
All right, guys. So let's talk about conventional FHA appraisals and what what they're really looking at for conventional. I'll give you a personal story. I bought my house last year. It was a starter home. The definition of a starter home, everything was broken. They never took care of anything. This house would not fly with FHA. The plumbing was messed up. The kitchen was dirty. Windows were cracked. That would not fly with a FHA appraisal. But luckily, I was pre-approved with a conventional loan, and I was able to get that closed. The underwriters did request for some things to be fixed, but it wasn't a deal breaker. The house for FHA, if this was an FHA, if we would have done it as an FHA loan, you guys would have had a little bit of a obstacle because the house has to be livable, it has to meet certain standards. One of the big issue is plumbing. You guys have to make sure the plumbing works, the electrical works. The appliances doesn't really matter. It has to have certain feet from the sidewalk. It's different stuff. I'll send you guys a list of stuff that they're looking for FHA appraisals in order to protect you guys. If you guys have a listing, just to make sure that you won't have any hiccups with an FHA appraisal. But it's not too many things that you guys need to worry about when it comes to an appraisal. But another thing about FHA appraisals is that the appraised value sticks for at least 4 months on an FHA loan. So keep that in mind. If you guys have a listing and it was a buyer with an FHA loan and that loan didn't close for whatever reason, now that appraised value is stuck on the property for at least 4 months. Keep that in mind, guys.
And then in the last one, you got the hard money number, or whatever. In case anybody wants to an investor,
Hard money, guys. I only offer hard money for the last case scenario when the deal, there's no other option for that client if they can't qualify with a traditional loan or non-QM. Private lending, this is where banks, and I'll be very transparent. That's where a lot of banks make their money because they know the situation and they take advantage of the situation. So if you have a client that doesn't qualify, hey guys, you can't close, but now let's talk about your credit. You don't have the best credit. We're gonna have the way you're gonna get this property is now with a higher down payment. There's also points that you pay to that private lender. What are points? Those are pretty much in layman's terms, that's their commission that you're paying now on top of them giving you all this stuff. They offer anywhere between 12 and 24 months of interest only payment loan options. After that, you guys have to either sell or refinance into a different loan. They may even give you an option to extend, but you guys will have to refinance or extend after that term ends or before that term ends. But private lending, it is an option. It does come with higher fees, higher rates.
what's the minimum down payment on that?
You're probably looking at between 20% and 30%. So keep that in mind.
For 24 months, down payment of 20 to 30%.
20 to 30%, guys.
For that one's for investors or anybody that doesn't qualify for any of the
It
loans.
doesn't matter what kind of type of property you're trying to buy. I would only suggest private lending or hard money if they're not able to qualify with any other loan. This is your Hail Mary loan to
To get the property.
get the property.
Can you explain a little bit about the HELOC loans? I keep having.
HELOCs. I love HELOCs.
Friends keep asking me about HELOC loans, and I'm like, shit about it.
Guys, HELOC loans, we have the fastest HELOC programs out there. Guys, 5 days from application to funding, you get your money in 5 days. We have a couple of banks that offer an automated system where they do a soft pull. We don't look at anything. There's not even an underwriter. It's just the system. Is what we put it on the application, and the way they confirm your income is very neat. You could either connect your bank account to the system, so the system can analyze all your monthly deposits from the last 85 days to calculate your income. That's one option. You all could also do is connect your IRS account so they could verify your income that way. Another option is you link up your payroll system. So they calculate your income that way. I did one in the month of November. It was an individual. He had 660 credit score. We combined his income with his legal wife's income to qualify him, and he walked away with a little bit over 300,000 in HELOCs. He applied on a Friday. He got his money by Wednesday. The program is really quick. I love this. Guys, use this program to your advantage. It does become a second lien. The borrower can choose the type of loan term they want, whether it's an ARM, an adjustable rate mortgage, or a fix. They can go with whatever year loan term they want, meaning how many years you guys want. Do you want 5 years, 10 years, 15, 30? They have that option to make that loan term for them. They could create it for themselves. That one I'm mostly hands off because I have no one to talk to. There is no underwriter in this. It's what we put in the system.
And
So,
based off
use
the
that.
equity of the house.
Based on the equity of the house. There's no appraisals either. So the system will go by something called Air DNA, where it's pretty much that they go into the MLS and they'll start doing, the system will do like AI comms to analyze the value of your home. So this is very automated, very fast, very comprehensive stuff. If that's not an option, because there are options where I had individuals saying, hey, look, I don't want to go with this program. It's great, but it's not for me. Why? Because the system is not going to calculate or analyze the work that I already did to the house, the improvements. Cool. We have other options, whereas manual underwriting, where we can't talk to an underwriter. We can order an appraisal to get the equity that we need in order to get you guys the fundings that you guys deserve.
Okay, sounds good.
How is the repayment? Because my friends will ask me that the HELOC loan, let's say they get a loan, but they don't have to use all of it at once.
Correct. It's like a credit card. You only pay what you use.
So it goes into the mortgage or is it?
It's a second link.
So it goes into the mortgage.
And can you use that to buy a second property?
You can. You absolutely can.
Well said. Karen, you got any questions?
En the HELOC, ¿por cuánto tiempo debes tener la propiedad?
Por lo menos 12 meses.
Okay.
A year?
Yeah.
That's our mind.
So, una cosa que quiero tocar bien importante. No sé si quieren que lo hable en español o en inglés, pero bueno, lo voy a hablar en inglés mejor para que lo pueda explicar un poquito más claro. The matrix changes depending if it's a primary, second home, or an investment property. So the loan to value changes. It's much preferable if it's a primary resident property. The loan value is 95% loan to value when it's a primary residence. Also, credit score is very important on this because that changes numbers as well. It gets stricter the lower the credit score is. You can only have 660 minimum credit score when it comes to HELOCs. For a second home, the loan to value is 85%. And for an investment property, the loan to value is 70%. But that number changes if you have a lesser credit score. So please keep that in mind.
So loan to value is how much equity you have.
Correct.
No.
Correct.
So only 70% investment. So the
Correct.
value the only could pull out.
Correct.
All right. Anything else, Karen?
I'm good. Thank you.
All right, Karen, thank you so much.
Thank you.
Appreciate it.
Thank you.
All right, guys. Thank you so much for having me.
Okay, next time
Thank you.
construction loan.
Construction loans.
All right, guys.
Thank you.
Bye.
Thank you.
Thank
Buen
you, guys.
día.